news for Tuesday, November 29th, and these are the 5 things that I think you need to know today. First and foremost, Fed President Bullard did not disappoint yesterday. He frankly came out and gave us exactly what you and I were talking about over the weekend. So we were ready for James Bullard to be the big hawk in the room. Remember, we got Jerome Powell tomorrow. He is going to be equally hawkish, if not worse. So what did James say? What did Mr. Bullard say? The inflation fight is going to be longer and higher than the market expects. The market is underpricing the risk that the Fed will be more aggressive than they expect. The Fed is going higher. They are going to go slower, and they are going to stay there longer. If you watch this channel, you are not surprised by that. You were ready for James Bullard. Again, we nailed that. James Bullard gave us exactly what we expected. Next, let's talk about the housing market. We got updates from the Case-Shiller. We got updates from FHFA, and they tell a slightly different picture, both on a month-on-month and a year-on-year basis. Let's go to Case-Shiller first. First and foremost, the S&P Case-Shiller Index, month-on-month. Again, this is for October, right? No, September. September. I always think it's odd that these things are so old. That's like 2 months ago. Why does it even matter? But I digress. S&P Case-Shiller Index for September, year-on-year, down 0.8%. However, still up 10.6% year-on-year. And for all of you out there that need a reminder, I am calling year-on-year, no negative numbers for the median home price this year. We only got 1 month left. So we shall see, but I still feel pretty good about that. It will be in the low single digits, but it will not be negative. FHFA tells a slightly different picture. They actually showed that the median home price was, ready for it? Up. Yes, folks, I said up. Not down, I said up. 0.1% month on month. I'll say that again because some people probably fell out of their chair. FHFA prices, median home price was up 0.1% month on month. It was up year on year, 11%. Now, folks, remember, when I started talking median home price, we have to understand what median is. Median is the middle. And as I shared months ago, when people were losing their mind that I thought median home price would be up, it's about the mix of homes selling. I still believe, my opinion, that the low end of the market, median home price down, huge supply destruction. People are locked into first-time homes. They're not going to move. It'll be years before they consider moving. Where is the pain? Above the median home price. So I believe there's a structural imbalance because the Fed broke housing. I believe the Fed broke housing. And again, to be clear, they didn't break housing in the last 3 months. They broke housing 2 years ago, and we are paying the price today. So again, FHFA says median home price in the country went up 0.1% month on month, up 11% year on year. I thought that was pretty interesting. Next, $1 trillion. $1 trillion. So if you've been watching my channel for any length of time, you know that I believe what am I doing in my business? I am buying residential properties, 4 units and under. 30-year fixed rate debt, cash flows day one. I believe there is a huge opportunity coming in commercial financing, multifamily, office, retail, whatever your heart's desire. Yesterday, I had a friend that is attending a special Grant Cardone invite-only event in Florida. And on his social media feed, he said that Grant Cardone has already identified 1,457 multifamily properties that don't cover their debt service. Grant Cardone believes, as I have been saying for 9 months, that the big opportunity will come in 2023 or 2024 when we see all of these bridge debt, all these value add opportunities blow up. You can go back and watch my channel. We've been calling this for 9 months, and now Grant Cardone is putting real numbers to paper. 1,457 and these are large multifamily. Grant, I don't play where Grant plays. I play in the 5 to 40 unit area. If Grant has identified 1,457 properties, 100 units and above, how many do you think there are from 5 to 40? I am excited. Again, it's nice to see others say, look at what's coming. Folks, I have been here before. I know what's coming. So again, do the work, do the work, do the work. I don't wear this hat for nothing. By the way, shout out to the Alaska airline pilot who saw me at the San Francisco airport yesterday. You're amazing. Thank you for all you do. I should have gotten a picture. I'm sorry. Next time. Folks, if you see me out and about, come by, say hi. If I'm with Olivia, we can do a picture, whatever you want. But yes, shout out to the Alaska airline pilot. Thank you very much for all you do. So again, folks, 2023 is going to be an economic shit show. But you and I are getting ready. We are doing the work. We are going to do some amazing things. Don't rush. Don't gamble. Don't overpay. Go buy the hat. Go buy the sticker. Remind yourself. Do the work every day. Howard Marks. Gosh, I am so excited for next year. Man. Howard Marks, another billionaire. Howard Marks says there is going to be a boom in distressed assets coming. I'm getting excited. He says with less liquidity, less lending, banks are getting tighter, not as much non-QM and other things flooding the market because money is not free or risk is not free. Less liquidity, higher rates causes pain and tremendous opportunity. Folks, I did a video this morning, live stream, that if you don't mind taking a watch, I would appreciate it. I laid out my goals for the next 13 months. Everything from, deals and this and that. It's all there for you. Take a view of that. Let me know what your favorite is. Let me know if you can help me achieve some of those goals. So again, Howard Marks, awesome. Grant Cardone, awesome. Patrick Bet-David, awesome. Folks, it's there. Recessions are scary if you're not prepared. If you watch this channel, we know that, and we are getting ready. China. So we talked a little bit about China yesterday, their protests and all of this. I want to talk about it from a U.S. inflation perspective, because I believe all of the Chinese zero tolerance, all of that will impact inflation here. How? In two ways. Again, remember how I see inflation. I believe inflation is a stack. There's an easy, a hard, and a really, really hard. That is important. All these people like Kathy Wood that talks about disinflation and inflation's going to disappear like Casper the Ghost. They don't understand the stack of inflation. So first, I believe, as you will see, I suspect oil is probably going to be something you and I can look at every day. I believe because China economy is slowing down, and I would argue in a recession, could be a depression, but let's call it a recession. You're going to see commodities come in. They're going to continue the trend of being cheaper. China's not going to be this engine of just consuming commodities. So you're going to see that easy part of inflation come off. But now, unfortunately, right? The easy, the hard, and the really, really hard. I think the really, really hard gets really, really harder. What do I mean by that? I believe what we are going to see because of Chinese leadership decisions, more and more people are going to choose to manufacture elsewhere. Some of that will bring it on our shores, onshoring, nearshoring. All of it is inflationary. All of it is structural. All of it takes time, wage inflation, and all of these things. So I believe in the near term, Kathy Wood will get what she wants, and we'll see, the high watermark of 9.1 come down to 6.1, 6.2, something like that. Then it gets hard. But then there's the really, really hard, which again, Mohammed El-Arian pegs at 4%. That's actually what I have used historically. So I want to thank him for watching my channel. That's a joke, by the way. I agree. I think the last 4%, really, really hard. Getting to 6, easy. 6 to 4, takes time. Getting under 4, it could be a while. So, folks, again, thank you for that. That's the 5 things you need to know today. James Bullard didn't disappoint. Housing market up, according to FHFA, 0.1% month on month. Go figure. $1 trillion in opportunity coming. Howard Marks, a billionaire, says, get ready. He's excited. And how will China affect inflation here? Folks, have an amazing day. Like, subscribe, comment. Just be great. Be awesome. Remember, do the work. Bye-bye.